Okay, so what we will take a look today, we will take a look on dollar yen and US yields compared to the S&P 500. Then I will also take a look on some dollar pairs like euro, cable, also dollar Swiss. Actually, these were currencies that were doing pretty well in this week. And also at the end, I will take a look on gold and dollar CAD. Dollar yen, firstly, if we take a look on dollar yen, anyone took a short on dollar yen? Or anyone still holding shorts this pair? So actually on dollar yen, we will ignore this monthly chart because it's not relevant at this stage. So on the daily time frame, as you know, in our past webinars, I mentioned several times that we are looking for weakness on dollar yen because of completed 5-wave rise from this was from 2011 low, and of course we were looking for minimum 3 waves of decline. We identified first leg as a leading diagonal, and then this move has proved corrective already back in mid-March because this was a 3-wave move. So after this decline, I knew that that this rally is only temporary and that we will see a new swing low. Okay, I'm expecting a test of 100 level or maybe even lower, and my minimum expectations obviously is a break of this low. Okay, and then we will see how the price action will be playing. If the market will be accelerating to the downside, then we will know that this is wave 3 or maybe just in a wave C. So in either case, for now, this dollar yen is bearish, and this on the 4-hour chart identified as a running triangle in wave B, and this was wave C to the upside. Now the non-farm payrolls report in March caused this reversal on dollar yen, very strong fall in days afterwards, and the same has happened here. Non-farm payrolls report, and I was preparing myself for a reversal. We have seen a nice move to the downside, and immediately on Monday I suggested clients to go short this pair as long as the market is trading below this swing high, and so far it has been doing pretty well to the downside. And actually on the hourly chart, before I go to the intraday charts, should I make these charts bigger or are fine with this size? Because some traders wanted to see them bigger, some are okay. So just please confirm into the chat box if that's fine. It's okay. Okay, perfect. So here, this was a very strong fall on the dollar yen, and if we go to the hourly chart, you can see that this decline can be counted in 5 waves. Earlier this morning I was hoping that this will be a 5th wave low of this wave 1 and that we will see a 3-wave bounce. I'm not sure if that's the case, but definitely from a trading point of view, I would love to see a deeper corrective retracement before we may rejoin this trend. Okay, so critical invalidation levels remain 104.11, and any rally should be temporary. Now we are also here at this support line of this channel, and so definitely I am interested to see a bounce from here back, maybe back towards this wave D, which was a swing high of this wave B triangle. Okay, so I'm waiting for this pullback for better levels to go short maybe, and also I have here this alternate count, which suggests that we are already in wave 2 here. In that case, still we expect higher levels. Okay, so I don't see this dollar yen moving straight to the downside. Definitely some larger corrective pullback will occur. Minimum, I would like to see a retracement for 38.2%, okay, compared to previous 5-wave decline. Now we have seen here also a divergence between wave 3 and wave 5. You can see on the RSI, which is trading actually in the mid-range here. So to me, it tells me that this market could be found temporary support, okay? But definitely, market is bearish. So if we will get a pullback, that's good news. If not, then market can always go straight to the downside, okay? But definitely, we are looking towards a new swing low. And here we also have US yields. I showed you this chart also several times in our past webinars. Just a second. Okay, so you can see here that I was identifying if we were our attendees of our webinar, then you will know that I mentioned that this is impulsive decline, this is corrective move, and we expect move to the downside on US yields, which is supportive for Japanese yen. In other words, it's negative for dollar yen. Okay, so you can see here also an overlay chart between ETF of Japanese yen. Okay, here in purple, and this is these are US yields. So if US yields will continue to the downside, Japanese yen will rally, which means the dollar yen will fall. So if we focus on this, which is said is a corrective move, we expect a new swing low, which means there is room for more downside. So dollar yen should continue to the downside as well. Okay, and this is also the reason the decline why the S&P 500 is trading to the downside as well. As you know, the US bonds are rallying. Actually, I have counts here for check 10-year. Actually, I have 5-year US notes here, and I'm looking for a move to the upside. Okay, so at the same time, US yields are obviously falling, and stocks are also falling, moving to the downside. Okay, so I think that dollar yen will continue to the downside. Even S&P 500 has room for more downside, for a bigger corrective pullback. Now here we have the S&P 500. Now keep in mind that larger trend, bigger trend on the S&P is still up, is still bullish, and that we expect only a corrective retracement. Okay, so ideally we will see this blue wave 4 retracement back to these swing levels from start of February, and we expect obviously a pre-wave retracement or maybe something else more in complex fashion, which means that at the same time US yields will probably also continue to the downside, and dollar yen as well. Okay, now here is the daily chart. This is a 5-wave rally in 5th wave, and I'm now looking for a pre-wave decline back towards this, as I said, February swing lows. Okay. Now on the 4-hour chart, I was identifying this reversal after I was able to count 5 waves to the upside. We also noted, members, that there should be aware of bearish turning point. We have seen a very strong move to the downside, and this move resumed yesterday after very nice 61.8% compared to this previous fall, and again very strong move to the downside. Now the question is if this will be only an ABC or we are already in wave 3 of an impulsive decline. So at this stage it's very hard to answer this question. Okay, so we will have to wait on more signs on the intraday basis, and I'm referring to this 1-hour chart where I can count 5 waves down from 61.8% retracement, which means from yesterday highs. We can count down, so be aware of rally. Okay, we will definitely see a rally, and if this rally will show us corrective price action, in other words, if this rally will be slow, choppy, overlapping in 3 legs, and if the rally will not be so deep, then I think this will be a very important sign that this is a correction and that this market will continue to the downside. Okay, so I would say that this rally, let's assume that low is in place of fifth wave here, then I definitely do not want to see a retracement for more than 78.6%. Okay, so I do not want to see prices going above 1857 on the S&P. At the same time, keep an eye on this trend line. Definitely this trend line should also be very important. So for a bearish case, we need to stay below this trend line. Okay, and as I said, if we get only a 3-wave bounce, then be prepared on resumption of a downtrend, and in such case, dollar yen could really be a good trade on the short side next week. Okay, I just hope that this S&P will not go straight down, and dollar yen as well. Okay, so any questions so far? So for this was for the S&P and also for dollar yen. So we have next one. We'll take a look on the euro dollar. Euro dollar was how to confirm the alternate count for dollar yen. You mean my alternate count or? You mean this one, the intraday? If you're talking about this intraday, then actually you cannot confirm it at the moment. All I want to see here is a little bit higher levels. Okay, that's why I'm tracking the alternate count. Actually, it's not important if this count of a flat is correct, or maybe we'll see a zigzag in either case. This tells me that we will probably see, there are chances that we will see higher pullback on dollar yen. Okay, this is what I want to see before we may get involved on the short side. So actually, that's all. At the moment, we cannot confirm this because there are too many different possibilities at this stage. We can also go straight to the downside. Okay. So let's take a look on the euro dollar. Now on the euro dollar weekly chart, we are still looking for this wave E, which is still unfolding, but very slow, very overlapping price action here. So I'm even more confident that this is final stages, that we are in a final stages of wave E. Okay, this is definitely not impulsive. Okay, impulsive. This is impulsive. This very strong fall. This is not impulsive. This is corrective. So here, however, top still did not form on euro dollar. I'm looking here at some very important cycles. Actually, I'm tracking here a double zigzag. As you can see, first zigzag, wave X, second zigzag, which is still incomplete, and I'm paying very close attention to these cycles in a second zigzag. We're noting that wave A, first leg of a zigzag, has unfolded, was lasting approximately 90 days. Then wave B triangle 100 days, and now I'm wondering if this third leg will also be unfolded 90, maybe 110 days. Okay, So there is definitely time and room for a little bit higher levels. I'm looking here at a triangle measurement. I take this distance wave A and I measured it from a wavy triangle, and I can see room for another 200 and maybe 300 pips to the upside. And the next thing is I definitely want to stay with the trend. Okay, trend is clearly still up, no matter what my bias on the longer time frame is. And actually, the 4-hour wave count confirms this fact. This is very overlapping price action to the downside. I was constantly looking and counting this decline as a corrective move. Okay, I was able to predict a turning point around 137, and we have seen a very strong move to the upside since then. And the market even accelerated after this broken channel line, which reacted as a support here on the intraday basis. However, I was hoping on some solid corrective free wave move, but usually when the market is very strong, you can see very strong move to the upside. So maybe it's now time for a free wave retracement, because we also have seen a move up to this wave X. Actually, we have seen a move above it. So maybe we will finally get this free wave retracement. Also notice this wave B swing high has been taken out as well, and ideally this wave B swing high will react as a support. Okay, when the resistance is broken, then you want to see this resistance will become a support. So I will be looking for something like this. Also, this was a consolidation here. We go to the hourly chart. This was consolidation at minor triangle here. Back around this way, this is my wave B level, okay, around 138. So actually this could be a very nice region for longs if we get a free wave retracement. Okay, if top is in place, that's the question. Okay, so just a second. You can also see here a 38.2% retracement. As I said, when I'm looking for a pullback, I want to see a retracement minimum for 38.2. Okay, so 138, 138.20, this is definitely a very interesting region. Here was also divergence, so it confirms the fact that market was trading in final stages of this recovery. I think that the euro dollar was very slow to the upside, but still bullish, because it's not easy for traders, investors to be long euro dollar when you see stock market falling so sharply. Okay, so that's probably the reason. And if the stocks will continue to the downside, then this pullback could finally unfold maybe at the start of next week. So I will pay a very close attention to this one as well. Okay. What we have here on the candlesticks, very strong bullish engulfing pattern, like I see on a weekly basis. Still, the week has not ended yet, but if we'll get close around above 138, which I think we will, then I will definitely look straight to a new high next week. Okay. Here's also another alternate accounts. Now on my platform in the right, you will usually find the alternate counts. Okay, on Okay, traders, we had some technical problems. So actually, I don't know where we finished. Uh, can you just please confirm if you saw my euro dollar discussion or no? Okay. Yep, no, from euro dollar. We didn't see euro dollar. Okay, so and there were some technical problems. So 13870. Yes, but it was trailed stop. Okay, so if you were following our analysis and strategy, then you still should be doing well on that trade. So on the euro dollar, just once more, let me repeat this. On the daily chart, we are tracking these cycles for 90 days, 100 days for wave B, and 90 to 110 days could be long for a wave C. Okay, so there's definitely time and room window for more upside on the euro dollar, but in the second part of 2014, I think that we should be aware of a reversal. Now maybe in, yes, exactly, 40 to 50 days yet. So at the start of summer, we should be aware of potential reversal in price, if not even earlier. Now here on the alternate counts, I'm also looking for a new swing high, but again, because of fifth wave and because wave 3 has been shorter than wave 1, I see limited gains here for euro dollar. Definitely we should be aware of a reversal sooner or later. Euro dollar, I think, turn bearish. Okay, we are still not there yet. This is a long process, but based on the current price action we see, I think that euro dollar will turn to the downside, maybe from 1.4 psychological level. Okay, so just let me ask, did you see this 4-hour chart of the euro dollar earlier before the technical issues? So okay, no. So on euro dollar 4-hour chart, I was tracking this corrective pullback for a while. I was identifying this as a double zigzag and called a reversal around 137. We have seen a very nice move to the downside. More importantly, first time above new swing, first swing high here. Okay, notice that here was a high in place, swing high in place, swing high in place, and this swing high was broken, which means the trend has changed. This is also very strong impulsive lag. Okay, so be aware of a three waves of retracement. Now, when you get a free wave retracement, you will ideally get it back to the support levels, actually to the levels that will become a support. Okay, so this level was broken, this swing high, and ideally, if the market is in bullish trend, this swing high will turn into a support here. Okay, so be aware of a free wave retracement. Now on the intraday chart, I'm also looking for a retracement back towards 38.2, as I said even earlier, that usually when I'm looking to get involved on the pullback, I want to see a retracement for at least 38.2%. Okay, this is also a wave 4 here, a triangle. So 138, 138.20 is definitely an interesting zone, but we need these three legs. Okay, so once I will have wave A and wave B, I will try to predict a low zone for wave C. Okay, so this was for euro dollar. Clearly, as I said, sentiment currently is bullish, trend is up, and it will remain in this shape as long as these lows are in place. Okay, so meanwhile, any free wave retracement will be only temporary pullback. Okay, here on the weekly chart, we are looking at a bullish engulfing pattern. So if we will close around or above 138, which I hope we will, then euro dollar will remain in the bullish side for the next week. Okay, so now let's take a look on the next markets. We will take a look on cable. Traders, just please confirm that the sound is also okay. I don't know why we are experiencing some technical issues today. Okay, perfect. Okay, so on the weekly chart of cable, we are looking for a move to the upside in wave C. Actually, minimum objectives suggest above spike or just a new high above wave A. So on a daily, we were looking for this 5-wave movement. In our past webinars videos, we mentioned that we are looking towards the highs because clearly this has unfolded in a corrective manner. It was a 3-wave move on the 4-hour chart. If you remember, and if you're following the analysis, you know that I was looking for this wave to pull back towards these previous swing lows here. Okay, so we have seen a very nice and strong reaction to the upside, which I think it's a part of this uptrend. So we expect to see a new swing high maybe next week, but we are now in a very deep pullback here, as I can see back at former wave 4. So I definitely want to see that these levels will hold in the next few trading days. Okay, so I would say that support from where I would have to see a reversal is 66.80 up to 67.20. Okay, so these are levels for where we should see a bounce for this uptrend continuation. Okay, so we'll see how this will play out. If we will continue to the downside here, then this will turn into something very ugly and complex, and in that case trading cables will not be easy. So I really hope that we will get this bounce here. Yes, I will take a look on crude oil later if we will have time. Okay, so that's for cable. And now also let's take a look on gold. On gold, we are tracking, as you know, a triangle placed in 4th wave. So the market is actually moving sideways, but it's a sideways. It's actually just a pause with an ongoing larger downtrend. Okay, now we can see a 3-wave move here, complex correction down, 3-wave rise here. So I suspect that this is a triangle. We are, as I said, going sideways here, trapped in a range. So I think it's a corrective pose for a 4th wave, and that we will see continuation to the downside, but not just yet. However, I'm expecting a little bit more weakness for wave D. I see room towards 61.8% and compared to this wave B, and 78.6% measured of this wave C. So I see room for more weakness. Notice that this is very strong fall, can be counted in impulsive fashion, as I'll show you on this 4-hour chart. An extended wave 1, wave 2, wave 3, wave 4, wave 5. We called a reversal here. I was looking for a retracement back to the region of wave 2 and not wave 4. As you know, when you have wave 1 extended, then corrective retracement will usually follow back into the region of wave 1 and not wave 4. When wave 3 is extended, in that case, you will see a retracement back into the wave 4. Okay, so in our case, this was different. We were looking for a reversal back into this zone, so 1320, 1342 is definitely a region for where I'm looking for a reversal to the downside. Now, this is still complex recovery, could still be unfolding here. I don't see any confirmations that we have a top in place. As you know, you need an impulsive move to the downside. Okay, so the question is how to trade the market on the downside, where if you're a swing trader, then maybe you would be looking to establish shorts in this zone, okay, and put the stops maybe above the highs of or above 78.6%, which is usually that I'm using in my own trading, okay. Or you will wait on this impulsive decline, first 5 waves to the downside, and then you will look to short a pullback against this wave B swing high. Okay, so actually this is up to you if you are intraday trader, swing trader, whatever. Okay, but I see room for more weakness on gold, and I'm expecting new swing low, ideally maybe already in April. Okay, so gold, actually this technical chart on gold is also very interesting. I can see that RSI here on the days reversing back to 50 and 60 levels. So if the market is in a downtrend, then you definitely want to see that RSI will find or form a top in that levels, okay, around 50 and 60. Okay, just let me remove this. Okay, so I'm expecting here a reversal down on the RSI. Also here the price is at 50-day moving average, which can also react as a resistance here. Okay, this was also previous consolidation here, which is actually wave 2, as I showed you on the wave counts. So I'm expecting a reversal to the downside from these levels. As I said, ideally maybe already next week. Okay, so that's for gold. Okay, we can go and check crude oil. So on crude oil daily chart, I was firstly bearish on crude oil when the market was here. Okay, I identified this as a free wave move. Obviously, I was wrong. This unfolded into a running triangle, and now I adjusted the wave count and looking for an ABC deep pullback in wave B, but still I'm just analyzing. Okay, I didn't suggest members yet to go reshort this market, because at firstly I need to see some evidences that I'm on the right track with the wave counts. Okay, so if we will get an impulsive sell-off next week back to this wave B range, which means back below 101.50 level, then I will label this as a completed free wave move, and in that case I will look for short downside. Okay, at the moment there are different wave counts possible as well, so I would not be looking for this stage here. Okay, I'm waiting on some bearish reversal signs. Then I will be looking down for a wave C. If we'll get this wave C down, which will be part of a corrective wave B, and then another move to the upside, another leg higher to complete this wave 2. Okay, so actually crude oil is sideways here, and quite bullish as long as the market is trading above this 91.12 level. Okay, here's also one of my alternate counts, and the reason why we should be very careful with any shorts taken here, because we could easily go straight to the upside, even higher for a wave D. Okay, this is my alternate count. The larger count is bearish here for a wave C drop. Okay, so that's for crude oil. Now we will also take a look on dollar CAD. And you're welcome, George. So on dollar CAD, trend is up for a while now, but market is stepping into a corrective pose, something similar like we have seen back here in summer of 2013. Okay, we have seen a free wave retracement, an extended rally, and obviously now again probably another free wave retracement. On the primary wave count, I'm looking for a completed wave 3 here with 5 subwaves, and I'm looking now for an ABC drop. This decline can be counted in 5 waves shown here on the 4-hour chart. This was wave 1, wave 2, triangle in wave 4, and wave 4. Okay, and this was a fifth wave down, and notice that market reversed to the upside in the past 48 hours. Also, we have seen a broken trend line connected from waves 2 and wave 4. Very important sign that market has bottomed and that we'll see a free wave rally. Okay, up into wave B, back towards these wave 4 levels, or maybe even 61.8% retracement. Okay, on the hourly chart, just let me label this very quickly. I can see here 5 waves of decline. So actually, I want to show you how this pattern played out very perfectly. Okay, this was a 5 waves down. Even this wave 3 had its 5 sub waves. Okay, so I think that this confirms the fact that market has bottomed and that we are now rallying in minimum 3 legs. So actually, my wave count suggests, as I said, that this will be only wave B and then wave C to the downside. Okay, but wave B should be made by 3 legs. So from a trading perspective, there could be opportunity to catch this third leg to the upside. Okay, especially if we also consider this alternation count. Okay, I have here wave 1, wave 2, extended wave 3, and maybe this wave 4 is an expanded flat where you see a failure breakout to a new high for a wave B, failure breakout to a new low, to a new swing low for a wave C, which means beneath wave A is now market reversing. So in that case, you would also expect a rise, but in 5 waves. Okay, and so this third leg to the upside could be wave 3, and this third leg could be opportunity that is matching with this third leg. Okay, so this could be very interesting in the next week. Okay, for dollar CAD. Now, dollar was also is quite. It could turn to the upside. It may turn bullish very strongly if stocks will continue to the downside. Okay, so dollar CAD. If we want to be long dollar, then maybe dollar CAD is the right pair to keep an eye on. Okay. So that's for dollar CAD. Just let me check these candlesticks here. Also notice a very nice reversal here on a daily candlesticks. Clearly a very nice reversal. Looking for more upside here, definitely towards 50 period moving average. I think it's a 50. Yes, so this third leg definitely very interesting. Okay, let me check what dollar yen is doing. Okay, so nothing much. Still hope we will get this pullback. Now dollar yen is, as I said, correlated to the S&P. So on the S&P, we have 5 waves down. So I hope we will get, as I said already earlier, we will get this 3 wave bounce, which will allow dollar yen to correct higher and give us some nice levels to go short dollar yen. Okay, so if you're trading S&P futures, if you're a scalper, then be aware that we could be bottoming here, at least for the short term. Okay, so if you want to get involved on the short side, rather wait on a pullback first. Okay, traders, I will have to leave you now. I need to update something on the website as well for members. So if you have any questions, just please let me know to answer real quick. So for those who attended the webinar a little bit late, I hope that recording will be fine. We had some technical issues today, so actually I really hope that this will not repeat next week. So Dow Jones, if you are a member, then please send me an email, and I will take a look on the channel and will reply on, or maybe even post it on the website. Okay, Aussie dollar. Let me check the Aussie dollar. I have been expecting a bearish turning point on Aussie dollar. So far, I didn't get it. Now on the weekly chart, was looking for another fifth wave of decline here to complete the ending diagonal. So far, this did not play out yet. Okay. Now on the, where's my daily chart? This is alternate chart. Okay, so here actually I'm still looking for a free wave rally. Okay, but I was hoping, also mentioned this in our past webinar, I was looking for a reversal from between 50 and 61.8% retracement. I was hoping on impulsive decline, but didn't get it yet. So on Aussie dollar, I really don't know if maybe the bottom has been formed and we will continue to the upside in impulsive fashion as shown on this alternate count. But if that's the case, then I want to see 161.8% extended level tested here for a wave 3. Okay, because if we'll get to those levels, I will be quite confident that we are in a wave 3. Until then, I'm quite on the sidelines for Aussie dollar and keeping on this count for a pre-wave rise as well. Okay. So ASEAN, actually we have ASEAN here as well. ASEAN, I'm looking here for a completed free-wave rise in wave B, and more importantly, interesting is this decline. It unfolded in 5 waves here, 1, 2, 5, and this rally is also in 3 legs, which confirms the fact that the market is in a bearish mode. I'm still not sure if this wave C out here, probably not. So I take a look on fib levels. On fib levels, I see room for a little bit higher prices. Also, retracement, fib retracement levels. So, I need to turn this around. Okay, so 61.8% is also a little bit higher. So this is for a long-term trader, definitely in very interesting zone. Very interesting resistance zone, around 97 up to 98. Okay, but I expect these levels to be tested because also I cannot count here 5 waves to the upside yet. For a wave C, maybe this is now unfolding an ending diagonal. Okay, so if we get an ending diagonal and overlap, then this will be stronger evidences that we are in the final part of this corrective rally. Okay, then sooner or later ASEAN will turn to the downside. Okay, S&P 500, I can already see the S&P 500 slightly reversing here. So if we'll get today back to this range, then I think that yes, that we are in a free wave rally already, and dollar yen will then probably made a pullback back above 102.15. Okay, so dollar yen is first on our list for possible short setup. Okay, traders, now really that's it for today, and thank you for joining our webinar. If you're new to our services, then please check out our website. Also, we have a special offer for new members. You can try our services for 1 month for just €1. So if you're interested, please visit our website www.ew-forecast.com and check what we have to offer. Okay, if not, that's fine. You will get an email to attend our new next webinar, and you can also check our free charts and newsletters from time to time. Okay, have a good day, traders, and Enjoy your weekend with your family. Bye.